makers and market movers. This is The Pulse.
Good morning and welcome to The Pulse, live from London. I'm Anna Edwards, in for Francine Lacqua this morning. US futures signalled a mild rebound in technology stocks as the focus this week turns to Samsung's results and SK Hynix's $29 billion US stock market listing. Let's bring in Bloomberg's Anthony Stevens, who's been following or continues to follow the tech sector for us from his vantage point over in Asia. And Anthony, the AI rally back very much in the spotlight, and Asia and specifically South Korea has a lot to say about the tech narrative this week. We've got the SK Hynix story, we've got Samsung earnings tomorrow. Paint a picture of what this week has in store from the sort of South Korean tech landscape.
Yeah, so the first port of call will be Samsung earnings tomorrow. So the implied move post-earnings is a 5.5%. Just to put that in context, it's a pretty big move that's being implied. It will be the biggest move going back, I think, to 2021. And that is a factor of the stock's very high volatility in recent times. It's trading at around 90 vol, which is pretty high. What people expect is an absolute blowout quarter already. And so the guidance for record results, after record results, what does the order book look like into 2027, 2028? That is what people are going to be focusing on. Very similar to Micron, which came out with blowout numbers and then proceeded to trade down for the next couple of days. So people are hopefully trying to avoid that dynamic with some clear and clean guidance. Now, coming into today, we actually had Samsung raise semi prices as well, memory prices on semis as well, and Micron expand capacity. So this memory trade has very complex demand-supply dynamics going for it. Now, moving on to Hynix, they price the largest ADR since Alibaba, and it starts trading on Friday. Why that is interesting is this company obviously does not need that much money, but it wants to tap a new investor base to potentially increase its valuation in line with US peers. Micron, for example, taps that liquidity in the US market and on some days trades more than the entire South Korean market put together. So you can see the kind of riches that are at play for Hynix's ADR. That being said, what is very important for ADR players is some clarity on the fungibility of the instrument, and also the fact that in the past, these large ADR listings has not been positively correlated with future returns in those markets.
OK, and then take us on to some of the other the clues we're getting around NVIDIA, Anthony, because if I can get positive or negative stories around NVIDIA this morning. If I look at the Honhai numbers, I get a pretty positive take on what's going on at NVIDIA because Honhai is a supplier to NVIDIA. But if I look at what's going on in the Asian PCB stocks, I get something a little less positive from the printed circuit board names of all things. So how does that add up? What are you taking away from the NVIDIA story?
Yeah, and it's very similar to the memory story, right? The memory story right here, right now, is super strong. What does it look like going into the future with the future of the AI infrastructure build? And that's what this NVIDIA AI rack story is all about. It's about the Kyber rack architecture, which is basically a large box, very complicated box that is meant to hold NVIDIA's top-of-the-line chips, and they're having some significant problems making these large infrastructure rack boxes related to the printed circuit board complexity. Now, the printed circuit boards in the past have been relatively simple, conglomerations of plastic and metal. Right now, they are extremely complicated, and as a result, the share prices of the materials and the chips and the capacitors and all other tiny equipment that go onto these circuit boards have gone through a massive bull market. A lot of stocks in Taiwan and Japan are up 200, 300% on the back of that. Any sign that NVIDIA is hitting its technical constraints, and according to reporting by SemiAnalysis, this is going to be delayed until 2028. So it does sound like a significant technological hurdle. Any sign that this hurdle is insurmountable will crash forward demand for all of these components, and that is what is at play here. It's not the strength of the demand right here, right now, as guided by Honhai. If we're talking about 2028 guidance, and this is a very important dynamic for the AI trade overall. There is visibility in 2026 and 2027, which is why the stocks have done so well. Now we're talking about 2028, and the future becomes harder and harder to predict when you're getting this granular and this technologically complex.
Okay, yes, absolutely. Really important distinction on the different time horizons involved. Anthony, thank you very much. Bloomberg's Anthony Stevens with the latest on the tech trade as seen through South Korea from Asia this morning. Let us think about that, widen the conversation with Monica Defend, head of the Amundi Investment Institute, who joins us now. Monica, good morning. And no doubt you were listening there to all of the twists and turns of the AI story as it goes through the Asia markets today and here into Europe. How are you thinking about AI stocks at this point? Are you still leaning into the AI trend as a key engine? Are you being more selective within the AI space?
We're turning more selective. Actually, what we identified is the entire value chain of AI with the upstream, midstream, and bottom stream, where, for example, Europe can take the lead. And in this evolution of the AI trade, maybe it's better to be selective, as we said, including in Asia, and focus more on those that can deploy most of the value, meaning the bottom stream.
Yes, and where does that leave Europe then, Monica? What are the kinds of sectors that you lean into if that is your intention?
Well, definitely industrial is going to be a key sector because of its weight on the market and because this is the sector where we have the AI enablers, and this is where we think the value and the performance might come from. It has been lagging a little bit behind versus the upstream, so this is where the opportunity sits. Beside that, we have also the defense sector, the financial sector, the healthcare. So there is more a sector's story than really a beta trade that we expect for the remainder of the year. And this is where Europe might be well positioned.
And Monica, are you still leaning into the emerging market Asia names or geographies that have done really well so far out of the memory trade? I'm thinking, of course, of South Korea, of Taiwan. Do you lean into those further, or do you rotate into Europe from there?
No, we still be invested in emerging market, but as you said, more selectively. When it goes to the Korean market, basically is 3 stocks, right? So it is also a matter of not being overly concentrated, but being selective. We've been turning a bit more cautious on China and India, where, for example, the structural growth story is still there. And with oil prices retracing lower, this can be a nice benefit for the Asian equity market.
Monica, thinking about some of the central banks we will hear from this week, well, notably the Fed, of course, we'll get Fed minutes. What do you think will be useful in that context? Because the market adjusted quite hawkishly after the last FOMC, but then a little more dovishly just last week, listening to what Kevin Walsh had to say and some of the weaker labour market data. So what's at stake this week in terms of that Fed narrative and how supportive it is for stocks?
Well, you know, what has been said last week in the panel between Lagarde, Walsh, Baylis is really this shift from forward guidance to framework guidance. This is probably the only convergence we might expect in the central bank, which, when it goes to the Fed, leave us with kind of strategically opaque move on, given that tactics and strategy are not yet clear, and that we need really to work on the reaction functions of the central bank. So not being focusing on the next rate hike or cut is what we had in mind. But definitely our job is getting a little bit more difficult because we really need to dig into data, wage dynamics, CPI. We do not expect the Fed, though, to hike this year.
You don't expect the Fed to hike. Are you expecting other central banks to? I mean, the BOJ has been hiking. It's on a different path maybe to others. A lot of expectation around the BOJ and many people pointing to maybe if the BOJ moved faster, then the currency wouldn't be as undervalued as it is, as we watch some sizable moves in the yen this morning.
Well, we do expect the BOJ to hike in October, but this will still leave them in the accommodative place just because they're still below their natural rate. When it goes to the currency, they probably will continue to talk about, make announcements, but there is not material space for them really to act. So probably it will be more verbal than a material action out of the BOJ.
And if we're dealing with a Fed, Monica, that's more opaque, and some of that is by design, they don't want to give forward guidance, does that mean more volatility, do you think?
Yes, definitely. This will leave us with the front end that will be extremely reactive to data and to this uncertainty, if you want, on forward guidance. It is very difficult to take a directional position on duration, though we still like the 5 years, and the steepening of the curve is probably the most structural theme we see on the fixed income market right now.
Monica, thank you. Thanks so much for your time. Monica Defend, head of the Amundi Investments Institute. Let's return to the UK corporate landscape. Shares in the UK budget carrier EasyJet soaring this morning after agreeing in principle to a takeover offer from the US firm Castlelake worth more than £5 billion. The beefed up offer was Castlelake's fifth attempt after the two sides sparred over several weeks. Let's bring in Danny Lee, Bloomberg aviation and transport reporter, watching this story carefully for us this morning. Danny, what can you tell us then about the flight path, if you like, leading up to this latest offer? As I say, this was the fifth time, and it looks as if, they've at least won over the management team.
Yeah, at least now that EasyJet has accepted an in-principle offer from Castlelake, and now that beefed up share price, beefed up offer of 680 pence a share, that has allowed the stock, EasyJet stock, to move much higher this morning on the open in London. Although, interestingly, that share price jump is still far from that offer value that Castlelake has given. So it may be something where shareholders may be still tempted and may expect more hurdles or even bigger offers still to come. But at the end of the day, we will still see Castlelake do its due diligence, and then we will see a more formal bid put in place by August 3rd. So yeah, there's still a long runway to go, but indeed, at least now management is engaging, and now Castlelake have got a foot in the door.
And what needs to happen then for the two sides to actually land this final deal then, Danny?
Well, now at least once Castlelake does its due diligence, puts in an offer, it will be up to then the board to accept the offer and then put that through to shareholders. Critically, the shareholders are going to be so important in all of this in a really big way. The fact that the founder of EasyJet, Stelios, and his family own around 15% of the airline still. They've not said anything so far related to the overtures of Castlelake. So whether they're on board is going to be a critical factor in whether the current fifth offer given by Castlelake is going to be enough. But on top of that, the fact that Castlelake is a US entity, it's going to need a partner from Europe or the UK to come and get involved with its bid. That remains a hurdle around clarity of who maybe Castlelake will do a partnership with in order to then satisfy the regulators on putting this deal together, and ultimately how the regulators, the competition regulators, might entertain it. But clearly it's a busy time for European airline M&A because there's a lot of airlines, pretty sizable airlines, being snapped up or being absorbed by the bigger airline groups like the Lufthansas and the Air France KLMs, and the fact that EasyJet is just another, and its future, there still remains a question mark of whether it will remain intact in the future, because we see a lot of the airlines looking at parts of the EasyJet assets out there.
OK, thanks very much, Danny. Good to get your insights. Bloomberg aviation and transport reporter Danny Lee. The aviation sector, of course, has been shaken up by developments in the Middle East over recent months. Coming up, shipping in the Strait of Hormuz shows signs of recovering days after unexplained U-turns and detours by some tankers. We'll get more details. This is Bloomberg.
newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London. Let's show you some live pictures from the Iranian capital, Tehran, where the funeral of the supreme leader, Ayatollah Khamenei, is continuing. He was killed, of course, on the first day of the Iran war in February. Some 20 million people are expected to attend the week-long funeral. His casket will be taken through the streets of several holy cities over the next few days before being buried in his home city of Mashhad on Thursday. Back to the markets, and oil prices are fluctuating after 2 days of gains as crude markets weigh resilient flows now through the Strait of Hormuz. Major OPEC Plus members have agreed to another modest increase to their collective oil production quotas for next month, adding to the prospect of more supply eventually hitting the market if a US-Iran peace pact can stick. Let's bring in our Bloomberg Horizons anchor Abir Abu Omar, who's covering the story, of course, from Dubai for us. Abir, good morning. Are we seeing then a full recovery in tanker traffic through the waterway, to the extent it is possible to see with transponders on or off, or are operations still proceeding pretty cautiously?
Good morning, Anna. Full recovery is a far cry from what we're seeing right now. We're seeing movement through the Strait of Hormuz. We're seeing more movement than what we have seen over the past couple of months or so. But compared to pre-war levels, we're still very much below that average. Since Monday, we've seen an average of about 34 vessels, tankers, go through the Strait of Hormuz. That is way lower than the average before the war, which was about 100. Now we're seeing 20 ships or so making their way through the Strait of Hormuz on a daily basis. This is both with ships having their lights on or off, as we have been saying over the past couple of weeks, or since this MOU came into effect. So we're still keeping an eye on the movement through the Strait of Hormuz. There's still some caution when it comes to operators making their way through. We have heard from several ship owners that they're sticking to routes that were laid out by Iran. Now, we've reported on the story that some ships over the weekend have had to do U-turns. While we don't know the exact reasons behind why those reversals in the ship movements throughout the past couple of days or so, we can probably argue that the reasons behind that are because Iran had been adamant on having ships stick to routes that they have laid out near their borders, and ships that haven't or that do not stick to those routes have been prone to attacks over the past couple of weeks or so. We reported on an attack about a week ago or so, Anna, and so this is what we've been reporting on. This is what we've been monitoring. So in a nutshell, yes, there is movement. Yes, it is positive, but it's not at pre-war levels yet.
Yes, and up to recently, a lot of our reporting has been concerned about shortages of all kinds of energy products due to the closure of the Strait, Abir. But more recently, we're starting to hear people talking about the potential for a glut. And with that in mind, interesting to see that OPEC Plus is sticking to its plan to raise output.
Yeah, you're right. I mean, about 180,000 barrels or so starting next month. And really that prospect of bringing a glut into the market has been laid out by the likes of Goldman Sachs, Morgan Stanley, saying we might see oversupply by the end of this year, but it might be coming even before that. And one of the reasons behind this, Anna, is because a lot of those buyers during the midst or in the midst of the war have had to replace their oil from other sellers with not knowing when exactly the Middle East will reopen. So the real problem here is just exactly how or who do those Middle Eastern or Gulf exporters sell their oil to. There's no prospect of near-term selling to countries, particularly in Asia. And so this oversupply glut added by, or the addition of those barrels by OPEC Plus is possibly going to add more to the market. And that's why we're seeing Brent crude prices at around $70, $71 a barrel. Those are levels that we have seen only before the war, and the average estimate by a lot of these banks is laid out at around $70 to $75 a barrel by the end of this year, Anna.
Abir, thanks very much. Bloomberg Horizons anchor Abir Abu Omar on the latest developments in the Strait of Hormuz. And thinking about how that leads us into, how that affects the global economy, Bloomberg Economics says that the path for central bank interest rates has shifted higher for years to come. Its latest forecast for borrowing costs shows trajectories elevated by 0.5 percentage point or more through to 2028 as a result of President Trump's war against Iran. Bloomberg Economics Director of Global Economics is Jamie Rush, and he joins us now and can give us some more insight. Jamie, good to have you with us on the programme. So oil's roughly back to pre-war levels, is it? But rates are not. And that's the interesting sort of breakdown in the transmission, I suppose, that's behind your research. What are you saying then about the way that oil prices take us to a sort of higher for longer rates environment?
Well, I think there's a lot of what we, as economists, would call path dependency at play here, right? So, faced with exactly the same conditions, central bankers can behave in completely different ways because they're shaped by their recent experience. And the current cohort of central bankers obviously has 2022 front of mind. They're also feeding that into their models and the way they think about the economy. Of course, they have a big incentive to talk tough on rates and then not actually validate on that. And I would say that even though we are expecting interest rates to stay higher for quite a prolonged period of time, it's not quite as much as the market is expecting. And I think it's partly because of that belief that you have to talk tough on inflation, you get all the credibility benefits, but then you don't validate the expectation, and you get a slightly stronger economy as a result.
Yes, and so that's notable that, I mean, the market adjusted quite a lot after we heard the talking tough of Kevin Walsh around the latest FOMC meeting. Before that, the market adjusted very quickly when we heard the Bank of England talking pretty tough. And on the BOE side, we unwound some of those expectations of hikes. Maybe we're seeing something a little similar on the Fed as well. I mean, do you think then that we will look back on 2026 and say this was the year that central bankers, yes, talk tough, but almost with the intention of if you talk tough, you don't necessarily have to follow through with tough action?
Well, I think the US is a kind of a special case, isn't it? Because over there you have a labour market which is seemingly holding up absolutely fine. Interest rates, therefore, cannot be super restrictive. So I think you have this extra layer to think about in the US case. The idea is that we've learned over the past year or two that the US economy can withstand significantly higher interest rates without slowing down. Yeah. And so that tells you they have to stay there.
OK, Jamie, thank you very much. Jamie Rush, Director of Global Economics for Bloomberg Economics, out with that really interesting report. Let's have a quick look at US futures then. We, of course, were without the US on Friday. So US futures showing us something of a catch-up through Friday's session, through the weekend. Nasdaq futures notably strong, up by 0.9%, and not really shaken very much by one interesting line I saw coming through. SK Hynix reduces its ADR deal size to $28 billion. That's taking it down from $29 billion previously. That's not much of a big change, but it might at the margin shake sentiment around the tech trade, perhaps, as we wait for SK Hynix to do that ADR deal at the end of this week. So we'll watch that as it develops, but Nasdaq futures looking pretty positive right now. Coming up, we will pivot to the defence story as NATO leaders prepare to meet in Ankara. We'll discuss what is at stake with Elisabeth Braw from the Atlantic Council. How significant is it that this is taking place in Turkey? The relationship between Erdogan and Trump possibly centre stage then. That is next. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. Tech lifts US stock futures at the start of a week in which South Korea's memory giants will put the AI trade to yet another test. Russia carries out a massive air attack on Kyiv ahead of Donald Trump's meeting with the Ukrainian president at a NATO summit in Turkey. Plus, EasyJet shares jump after the budget airline agrees to a takeover by US investment firm Castlelake at the fifth attempt. US President Donald Trump is travelling this week to this year's NATO summit, which takes place in Ankara. Turkey is going to face wary allies and meet with the Ukrainian President Volodymyr Zelenskyy. about ending the war with Russia. Tensions are high due to friction over European defence spending, the war in Iran and Trump's persistent interest in acquiring Greenland, all topics that will be on the agenda. Let's get more with Bloomberg's Piotr Skolomovsky, who's in Ankara for us. Piotr, how are the relations then between President Trump and Europe heading into this summit? They've been stretched on a number of fronts of late.
Indeed. Good morning, Anna. So the situation is this. Only last week, President Trump took to social media to point out that U.S. is spending huge amounts on defense still. He did it twice already. Obviously, he was talking about total spending, and obviously U.S. dwarfs, in terms of its size, the amounts that the European is spending, which obviously doesn't augur well for the meeting itself. Europeans are probably going to hear again from Trump that they're not spending enough. Although over the last few weeks, NATO Secretary General Mark Rutte has been really making an effort to point out to Trump and to the US that Europeans are stepping up, and they really are. It's 250 billion as over the last 2 years that in terms of the increases. Most of the countries are on the way to this new target of 5% on defense. But they continue hearing from US there's this continued drumbeat of complaints that this is still not enough. And we're probably going to hear more of that during this summit. To allay those concerns, tomorrow NATO is going to present a number of deals during the industrial forum where, again, Rutte is trying to show Europeans are not only stepping up, but they're actually taking the responsibility for their own spending. So whether that's going to be enough to sway Trump, who also, and his administration has also been sending those signals about, if you're spending more, you will have also certain benefits you can enjoy from the US. So all of that will obviously play out over the next 2 days.
And over the weekend, then, Piotr, we saw Russia and Ukraine exchange a series of attacks once again. Talk us through those strikes, and if the summit may offer an opportunity to end the war, that is certainly one of the priorities that the European leaders are going to this NATO meeting with. They want to have some movement. Now the Iran conflict seems to be largely behind us. They want some movement on that front.
Exactly. So Zelenskyy is going to be here, and together with Europeans, we'll probably are going to have this concerted effort to focus Trump after the Iran war is pretty much under control. Now, over the weekend, we had an exchange of fire again, and it's this pattern we've been seeing for the last few weeks, where Ukrainians are hitting deeper into Russian territory and destroying refineries and really inflicting huge damage. But at the same time, Russia is also being more and more effective when it comes to their ballistic strikes on Kyiv. So, for example, we had a big, massive strike last week which killed 30 people, or more than 30 people. We had another one today when the death toll is now 11 and counting. And this actually shows the situation where obviously Ukraine is fighting back, but at the same time it needs interceptors, and they are US-produced Patriots that are really, the stockpiles of those have dwindled because of the war in Iran, and there's going to be an appeal from Zelenskyy to Europeans and also to the US, and probably that's going to be a topic when he meets Trump tomorrow, that more should be delivered so that Ukraine can have the upper hand. But when it comes to peace plan or peace talks, they still seem to be quite remote at this point, and it doesn't seem like President Vladimir Putin is anywhere near willing to actually resume those talks and agree to any concessions.
Piotr, thank you. Thanks for the reporting. Bloomberg's Piotr Skolomovsky with the latest in the run-up to that NATO summit. And ahead of the NATO summit, we're joined in studio by Elisabeth Braw, who is a senior fellow at the Atlantic Council with us on set here in London. Elisabeth, very good to have you with us. In terms of the mood being created by this summit, and often it is interesting to see what kind of mood President Trump is in with the other members of NATO. How significant is it that it's taking place in Turkey? And obviously he finds common ground with President Erdogan in a way that maybe he doesn't so easily with other leaders in Europe.
Yes, NATO can really thank its lucky star, or maybe clever planners, that it is taking place in Turkey. I think it would be difficult to think of a country that would be better to hold the summit in this year. So imagine if we're held in Denmark, for example, or Italy, that would just not go very well. But Trump is already in a good mood because it's taking place in Turkey, and has said that he's going because President Erdogan asked him, which is really quite something. So that is really a very good thing for NATO.
Okay, so that's a good backdrop, and maybe he's having a meeting with Erdogan ahead of the NATO summit, we understand. But then he goes quickly into a meeting with Volodymyr Zelenskyy. Is that where things fall apart? This comes with some history and some baggage, we know. Can they find some common ground, either on supply of Patriot missiles or trying to interceptors, or trying to get anywhere close to any peace talks?
I think President Zelenskyy has a trump card, as it were, this time, which is that Ukraine is doing really well on drones, and so well, in fact, that Ukraine has been assisting Gulf states with drones and training on drones so that they can better defend themselves against Iranian attacks, which is really a very good thing for those countries and for the war between the US and Iran, as it were. So he is not just a supplicant this time, or a beggar, if you like, but actually somebody who comes with abilities and equipment that others want.
And I assume that President Trump is going to continue to pile pressure on Europeans to spend more. I think we heard from the US ambassador to NATO that the 5% target, yeah, sure, there's a date in the future, but as far as the Americans see it, they just want it to be done as soon as possible, that other countries get up to that kind of level.
Indeed, and what we have seen is that a number of European countries really have gone to great lengths to get there. But so look at Estonia, for example, Poland, Germany, which has committed massive amounts of money to defence. And indeed, the Germans and others are growing their armed forces, because we have to remember, yes, you can use drones and technology all you want, but at the end of the day, if you're going to grow your defence and your military capabilities, you do need a few more humans. In fact, you need a lot more humans, and they are putting in efforts into recruitment, training, all of that.
Yes, in the UK context, interesting, my eye was caught by a headline coming through from PA this morning that says that UK fighter jets have intercepted Russian maritime patrol aircraft. And it does seem as if there are drip more of these stories about the threat level posed by Russia to the UK coming out into the media. And I wonder if that is by accident, or if whether that is part of what many defence chiefs have been calling for in this country for a long time, what they would see as a more honest conversation about the threat that Russia poses. I mean, what context do we need to add to these kinds of news stories?
Yeah, I think Russia is really trying to provoke NATO and individual NATO member states ahead of summit. So, for example, the attacks on really quite fierce and brutal attacks on Kyiv over the past 2 days. I don't think that is a coincidence that those have taken place just ahead of the NATO summit. Similarly, the provocative behaviour around UK waters, but also around Baltic Sea countries' waters. And it's interesting, it's always short of a military attack. And so this is what I focus on a daily basis. And we have seen so much growth in this area, which is called sub-threshold, so below Article 5. They keep poking us, but yet they don't engage in military attacks, because they know that in that case NATO would respond. American prevarications notwithstanding, NATO would respond. But if you do these sort of poking manoeuvres, and what can the affected country really do?
OK, so yeah, these sub-threshold, below Article 5 triggering actions that you see Russia doing. I mean, which are the most worrying then, Elisabeth? What nature do these attacks take?
It can be anything from sabotage to suspicious incidents involving undersea infrastructures, so cables and pipelines. And what we have also seen in recent weeks are that there are suspicious drone visits to offshore installations. And so it feels like it's something new every week, or sometimes every day. We've seen parcel bombs attempted to be delivered onto airliners. We have seen weaponization of migration. And so all of that shows that Russia really doesn't care about being a respectable country, or being seen to be a respectable country. It just wants to cause harm, and by the way, also financial losses to commercial companies, because most infrastructure is operated by commercial companies.
And what is America's view of that now? as we head into this NATO meeting?
So this is an area where European countries, European NATO member states and also other countries are far ahead of the United States. So the US is used to thinking about the world in sort of a black and white division between war and peace. And here in Europe, we're just seeing these provocations for much longer. And as a result, we're better prepared, especially in the Nordic-Baltic region, but also elsewhere. And this is extremely useful knowledge that European NATO allies can share with the US and Canada, and especially with the US.
OK, useful if trying to find some levers then. Elisabeth, thank you very much. Thank you for joining us. Elisabeth Braw, Senior Fellow at the Atlantic Council. Let's stick with this defence theme. As President Trump pressures NATO allies to boost defence spending, a new arms race is then taking place. Countries are pouring billions into attempts to be the first to master drones, hypersonic weapons, AI and other emerging technologies. The $2 trillion race for the control of future battlefields is the subject of today's Big Take story. And Jerry Doyle, Bloomberg's global defence editor, is one of the names attached to the story. Jerry, give us a sense then of the size and the scale of the spending spree that we're seeing being undertaken.
Well, globally, countries are pouring north of $2 trillion into this sort of effort. The U.S. alone is pledging to spend $1.5 trillion in its next defense budget. A large percentage of that is going to go to new and emerging technologies like this. And it's kind of a rich country's game at this point. Obviously, it takes a lot of money to get involved in these new technologies, especially on the space side. But there's certainly opportunities for other countries that are able to invest in something like AI that might be able to get to a breakthrough first.
Yes, and where does advantage lie then, Jerry, in this? Is it just in who's got the deepest pockets, who can afford to spend the most, or is it about very recent battlefield experience, which some countries, sadly, of course, have?
I think it's a mixture of the two. Obviously, the more resources you have to put into research and development, the more results you're going to get. And especially, again, in areas like space, where you need to put satellites in orbit. Satellites are extremely expensive to make. Rockets are extremely expensive and difficult to make. Getting in that game, very expensive. On the other hand, artificial intelligence just requires some land, some power, some data centers. Chips, obviously, are hard to come by. In terms of who has the advantage right now, it sort of depends on the technology. You know, Russia, China, United States all have hypersonic weapons in their inventory, but Russia is the only country that has been using those in combat in its invasion of Ukraine. On the other hand, in the air campaign against Iran, the U.S. says that it used artificial intelligence to help plan those strikes. So it's operationalized that already. The impact of that, how well it worked, remains to be seen. But those examples of how things are actually being used on the battlefield may show us an idea of who has the edge at this point.
Jerry, thanks very much for the update. Jerry Doyle, Bloomberg's global defence editor. That Big Take story available, of course, on the terminal and on the Bloomberg website. Coming up, it is 9:43 here in London, Monday the 6th of July. Our attention turns to the second half of this year for the investor community. Coming up, the move from chocolate to Barbie via tech giants such as Microsoft. Intriguing. We will dive into 10 companies to watch from Bloomberg Intelligence. That is next. This is Bloomberg. This is The Pulse. I'm Anna Edwards here in London. Now, to technology, and Ireland's economy is uniquely dependent on jobs from the US technology companies. That is in Europe, of course. More than 6% of the workforce is employed in the tech sector, higher than the European Union average. But now, many, like Meta, are culling jobs as they invest in AI, creating widespread employment anxiety. Joining us now is Bloomberg's Olivia Fletcher, who's in Dublin. Olivia, good morning. So concerns about how AI will transform work everywhere. But why is Ireland particularly exposed then to these latest developments?
Yeah, I mean, ultimately it's because of this kind of informal arrangement that a lot of, some of the world's biggest tech companies have with Ireland. Over the past few decades, companies like Meta, Amazon, Apple, Microsoft have all set up in Ireland. And, of course, they pay lower taxes for that, but they've also brought to Ireland a huge boost to the economy and, crucially, employment. But that story has kind of changed in the last 5 years. A few years ago, after the COVID pandemic, a lot of these companies cut back jobs, kind of attributing that to overhiring during the pandemic. And in the last year or so, those companies have been cutting jobs as they make billions of dollars worth of investments into AI. That impacts Ireland slightly more than other countries, A, because we're a big tech hub, but B, unlike other tech hubs like LA or Tel Aviv, Ireland has more kind of a lot of the jobs here are kind of ancillary, like trust and safety and content moderation. For example, we reported last week with the first report that TikTok was considering cutting 300 jobs in Dublin, but nowhere else, and that was in the trust and safety department. So, it's hugely concerning for Ireland, this tiny country on the edge of Europe that relies massively on these companies.
Yes, OK, so more exposed to these tech businesses can be great when tech's doing well, more worrying when there might be a lot of churn in the labour market. So how is Ireland going to be impacted by this?
Yeah, I mean, first of all, there's the impact on jobs. Like I said, TikTok was considering cutting 300 jobs. And a few weeks before that, Meta said that it was cutting 20% of the Irish workforce, which was well above the 10% global average that Meta was doing at the time and attributing to these AI efficiencies as well. So the immediate impact of that is going to be on kind of narrowing the tax base and impacting income tax. And, also it could have impacts on immigration as well. A lot of the tech workers I've spoken to in the last few weeks, they come from abroad to work in Ireland. They might have to look elsewhere for work now outside of Ireland. But it also raises much bigger questions about the future of Ireland as a hub for foreign direct investment. Whether Ireland is going to be able to climb up the stack and kind of create the higher value jobs that it needs. And, some researchers here have warned that, AI could eventually even come for those jobs in Ireland as well. Ireland is, the CEO of AIB, one of our banks, was on Bloomberg TV a few weeks back and, said Ireland might be losing these jobs, but will Ireland remain a tech hub? Yes, probably, because as long as there is that kind of tax incentive, Ireland will benefit from that. But it does raise big concerns about Ireland's future as an FDI hub. And, as we rely so much on these companies, it's a big concern for government here.
Olivia, thanks very much. Olivia Fletcher, our Dublin reporter, with that update on tech and the dynamics in Ireland. Sticking with tech, AI exuberance pushes big tech to new heights. Microsoft seems especially unloved at the moment. That's the take from Bloomberg Intelligence, which thinks the software giant is better positioned in AI than the market believes. The analysis is part of Bloomberg's 10 companies to watch for the third quarter, which includes everything from chocolate to Barbie. But let's start with the technology, and we'll do that with Bloomberg Intelligence Chief Content Officer, who is Tim Craighead, with us this morning here on set. Tim, good morning. So explain your view on Microsoft then. So the market got concerned about this along with a whole host of other software names earlier on this year. Some of those names have recovered some of their poise. What's the story with Microsoft and any lingering concerns or hopes you have there?
Yeah, well, look, and I'll put this into a little bit of broader context, if that's okay. The 10 companies that we have singled out here with this group today is part of a broader set of focus ideas. There's 160 of these right now. High conviction, differentiated, fundamental views. You find them on BI Focus, by the way, if you got a terminal. And these 10 have specific catalysts coming up in the third quarter that we think are important. Microsoft, you set it up perfectly. Unloved, it's lagged, there's concern about the AI disruption trade, SaaSpocalypse and all that sort of good stuff. But it remains the biggest, if not one of the biggest, LLM cloud providers. It's got a new suite as it relates to Office coming out in the second half. We think both of those will continue to surprise on the upside for revenue. Okay,
and so how do you play AI then through this list? Because you mentioned there Microsoft, and there is a large language model involved there, but you don't have any semis, I think, on the list. So how are you thinking about AI?
Yeah, we're always looking for hidden ways to play AI. So there's two on the list beyond Microsoft. One is a British company called Homuz. It's an electrical equipment company, industrial company. It makes lots of health and safety related gear. But one of the things that they have built is a photonics business, optical sensors. And that plays into data centers. It replaces copper. It increases the bandwidth. It reduces latency. It's a big deal. And one of the hyperscalers is a big customer of theirs. We think revenue will surprise. Telecom Malaysia sits right beside Singapore. That's been the big hub for AI in Asia. But they're running out of space. And this is now being built out increasingly in Malaysia. They provide the digital infrastructure.
Okay, you've got some slightly more cautious views on, this is a strange combination, chocolate firm Barry Callebaut and the Barbie maker Mattel. I don't know, do they go together? Things that children like, I'm not sure. But what's explaining the more cautious view on these two stocks?
Well, in our focus ideas aren't all constructive. They are cautious views. 4 of the 10 for this quarter are indeed cautious. These are different, but they are consumer companies. Barry Callebaut feeds into the chocolate business. They produce cocoa and process it for chocolate makers. Chocolate makers are actually using less cocoa in their formulas following the volatility and spikes of cocoa prices over the last couple of years. We think that continues, pressures volume, and El Nino, if indeed it's as big as everybody is now concerned, could actually end up having a negative cost impact for Barry Callebaut, so potentially a squeeze on two sides. Mattel is just simply facing a shift in toy demand towards things like building sets and trading cards. You know how crazy the trading card stuff has gotten as of late. Mattel had a big boost from the Barbie movie.
Yes.
Dolls are now not the thing, and we believe there's more revenue disappointment ahead for Mattel.
Okay, right, yes. You can't make a movie like Barbie every year, can you? That's not going to happen. Tim, thank you very much. Thanks for joining us. Tim Craighead from Bloomberg Intelligence. Let's skip forward to sports. And tennis legend Rafael Nadal has traded the tennis court for a career in business. The 22-time Grand Slam champion, who retired in 2024, has built his post-sport life around the expansion of his hotel brand, his tennis academy and foundation, as well as a supplements business. In an interview on the latest episode of Leaders with Francine Lacqua, the podcast, Nadal said he does not miss tennis after pushing his body to the limit.
I am not the kind of person that like to wake up every morning and don't know what to do. That's as simple as that. I need to have goals in my life. Even if I am very lucky and I could decide to do other stuff, just stay at home without plannings. But I don't understand the life that way. I am enjoying this process. And yeah, it's intense but interesting.
You played tennis for 23 years, 11 months a year. What do you miss about it the most? Do you miss it?
No, not now.
You don't miss it?
I always will be very thankful to tennis for all the experiences that I enjoyed thanks to tennis. In my mind, in a part of my mind, I always will be a tennis player. But I finished my career because was nothing else to offer, you know. So I don't miss tennis because I accepted, since I made that decision, that was the end for me. I was not able to keep going the way that I needed to keep going, you know, and I had plenty of issues. So I bring my body over the limit, I think. So I am in peace with myself and enjoying this new chapter of my life.
Busying himself. I'm sure Wimbledon misses him, even if he does not miss tennis. You can listen to that episode now, wherever you get your podcasts. You can also catch it on Bloomberg TV later today at 10 p.m. UK time. Staying with sport, FIFA has cleared America's star striker Folarin Balogun to play in tonight's World Cup match against Belgium. Bloomberg understands it follows a phone call between President Trump and FIFA boss Gianni Infantino. Balogun was given a red card in the match against Bosnia-Herzegovina. The card came with an automatic one-game ban, which as now has been removed. Belgium is reviewing possible options to appeal. This will run and run. This will continue. Up next, Bloomberg Brief. Have a good day, everybody. This is Bloomberg.